Good afternoon, March the 2nd. This is the chart show, and we've got a lot to go through today. Actually, we're in a period right now of suspended animation. I just had to kick my computer to make sure that the power was still on because everything has stopped. I think we're at an inflection point, and I'm going to talk about that. If somebody could just let me know, one of my regulars, that the sound is okay and you have visual contact with me, then I will get started. I've put up Andy Pancholi's turn dates. I just got them in yesterday morning for the month of March. Thanks, Stuart. Okay, so we're all good, and so you can take these ones down. So just leave them up for a couple of seconds. I've got some other notes here while you do that. So these are, if you're not used to his turn dates, these are cycle turn dates. And, Andy would be the first one to tell you that they haven't been that accurate lately, which is kind of an understatement. And I think that is partly because we've had a really unusual situation with certainly the S&P 500 and ES, all the futures, just rocketing in this, let's call it a blow off. And I think it has left the cycle dates a little bit in ruin. So I think they'll get back on track here. And so I leave these up just to say that even though we've had a little bit of a challenge with these, I think we'll start to see them get a little bit back more in gear as we move forward. I just wanted to, there are a couple of points that I put down for yesterday, that we're at a multi-decade optimistic extreme. These actually came from Elliott Wave International. I just pulled up a couple little points here. And the percentage of bullish advisors is at 63.1% now, which is the highest since January 1987. And 1987 was the longest bullish streak in like 100 years. And this one has been number two. This has been the second longest bullish streak. The last, I think it's 12 days. I haven't lost count, something like that, 12 to 14 days, something like that. So this is a real sort of blow off that we're getting. And mutual fund cash to assets ratio has dropped to a record low of 3%. So we're hitting records all over the place, and we're actually starting to get some gaps now in the S&P 500 in mornings, which is telling me that we're probably hitting some exhaustion gaps, and so it's getting really near the end. I'm going to show you that from an Elliott Wave perspective as well, but I just point that out. I'm going to get rid of these now. Hopefully you've got those. What else? I'm going to probably talk a little bit today about the entire market. One of the things that I do from an Elliott Wave perspective is look at everything. And I see an awful lot of other people that sort of look at one or two indices, and you can't do that. And you certainly can't do it now because everything is moving together. Currencies, and I've been saying this for a year, currencies, the indices, U.S. indices, you can go overseas and you can see the markets are getting very near a top there. So this whole, let's call it a vat of debt that is never ending, is starting to get deleveraged. And of course, all of the indices and the currency pairs are going to have to end up at their highs altogether. So one of the challenges lately has been that when we get these turns, which we've got right now today, everything turns. And so it just takes an awful lot of time for that to do that. And the other thing is that we're dealing with waves of different lengths. So one of the challenges over the last few weeks has been, certainly in the currencies, is the waves have been very much shorter there than some of the waves in, for example, the US market. And so we've had to wait as these things have been sort of going up and down, oscillating, waiting for the next wave down to happen. And so I think it's finally sort of happening today, and I'll talk a little bit more about that. Anybody new here, my email address is peter@worldcyclesinstitute.com, and you should receive a recording of this program within about an hour of the finish of it. And if you don't get it, just give me an email. Send me an email and just let me know, and I'll send it to you immediately. One of the challenges I'm having, and we're playing this game with Microsoft, is that my IP address gets blocked for some of the AT&T and I think it's Global South. There's a few email addresses that Microsoft blocks my IP address, and I've been trying to get this thing solved, and it's not working. So you could not get the email telling you that it's there yet if you have one of these odd addresses like AT&T.net. So I just throw that out. The first charts you're going to see are going to be static, and they're in the futures, and then I'm going to get into my live charts. Okay, so I've tried to grab these within the last recent little while, like the last hour, as much as I can. And I also have gold and silver in here as well, some subcharts. So we're going to work on the indices first, US market, and I'll start with futures, and then we'll go look at the Dow and NASDAQ, those sorts of things. And then I'm going to go look at the dollar, US dollar, and that will get us into the US dollar currencies. And I'll take you through my 1, 2, 3, 4, 5 currencies, and then I'll touch on bonds, oil, gold, silver. I will go across the ocean and look at DAX and AEX. And then if we have some time at the end and you have some requests, then I can also pull up a couple of charts, because my main charts that I'm using are going to be live. Okay, so we can see what's actually happening with the market. So here's ES. This is the daily chart. And this wave, I have got this, and I pull out another chart too of the S&P 500, which I'm going to take you through in a little while, which is a weekly chart and just shows this entire wave up from 2009 and the way I've got it labeled, just so we can look at the big picture and see, where I have us. I've got us in a corrective wave up here. So this is an A, B, and we're in a C wave. And I'm counting 1, 2, 3, 4, 5 waves up. And I have us in a corrective wave because I've got us in a corrective wave since the bottom of 2009. And I am going to show you why, my crazy reasoning. There are other people out there that have got us in a motive wave, and I can't imagine how that could possibly be just because of the count. So here we are with 1, 2, 3, 4, 5. This, we have a fourth wave coming. I put us pretty well at the top here of our third wave, but we've got one more small little wave up to do. I'm going to take you through that chart. And then we should come down in a fourth wave and a fifth wave to the end. So what we're talking about here is a zigzag. We had 5 waves up. It doesn't go back far enough to show you all of those. Can I get here? Almost. So there's sort of 5 waves up here at the beginning. So that would be my first zig, and then you have you have 3 waves, an A, B, C. Actually, this one is an A, B, C. It's all kind of in one wave here. Then we would have 5 more waves. Okay, so that's a zigzag. It's a 5, 3, 5 configuration. So that's why you're looking for 5 waves up. People are saying, well, have we topped? No, we're at the top of the third wave. We do need one more fourth wave and one more fifth wave up. But the third wave, which we've just had, is always the longest, and it's always the most powerful. So it is the one that we're going to sort of say that's the blow-off wave. The fifth wave, which we're going to have, should not be as powerful. And this wave extended, so that wave should be 1.618 Fibonacci ratio times the length of the first wave. So I don't know what that's going to be yet, but I've got a kind of a possible up here of between 2,500 and 2,577 for the S&P 500, a kind of a what if that I might be looking at in terms of a potential final top. Our wave down, the fourth wave, if it stays true to what Elliott wave typically does, should retrace 38%. Or to the previous fourth, which is right here. This is this little A here that would be what I would call the previous fourth. Previous fourth is 2234, and the 38% mark is 2249. So that kind of gives you an order of magnitude in terms of where I think we're heading after we top. We're not quite topped yet, but we should be fairly shortly by the next couple of days, I would think. It's because I put us only one more wave up. Low volume down here, I've also flagged that, so that's something to keep in mind. And another problem we're having is that the market just tends to stop dead sometimes, and I think partly that's a volume thing. This wave has been very hard to read that way because you think it's coming down. I mean, I've been able to stay pretty safe because there's been a couple of points in here that I have said, oh, it could go either way. And the waves tell you that. So that really comes down to whether you've got 3 waves or 5 waves. And so that has kept us safe on the way up here. And sometimes it is a daily thing where I've really got to go by, okay, what's happening? What is this telling me? And so that has been one of the things that has sort of saved us from any catastrophes so far. Here is the 60-minute chart. Now, I've got a couple of things here that I put on an Andrews pitchfork here just to get an idea of where this, I'm not going to go into how that works, but just to give you an idea of where I think this wave might go. I want to handle something first of all to make a point about third wave. So what we have here is we have a 4th wave down to this point, and then we had what I thought last week was starting to look like an ending diagonal. And I won't go through that story here, but we caught it at the last moment here because it came down and negated the ending diagonal. So it told me we were going to start to go up in 5. And at that point, that was just before Trump's speech. We had 3 waves down, and I said, okay, folks, this could go either way tonight. It could go up or it could go down. And sure enough, it went up rather than down. And we have had 5 waves. Now, here's the point I want to make about the configuration I've got now. I put on in my Traders Gold service last night that I was looking at sort of this accordion thing in terms of 5 waves up. And here's a little lesson in Elliott wave. When you get a third wave, which this obviously is, in these motive waves, the subwaves have to be even. In other words, there's got to be either 2 or 4 of them or 6 of them because you have little 5 wavers within. And so I looked at this and I went, okay, we have a first wave of 5 waves. We have 3 waves down. That's our second wave. Then we have what looks like 3 waves up. And for the longest time, the last couple of days, I've been looking at that and saying, well, then I need a 4th to get to the top of the third, and then I need another 4th here, a larger 4th to get to the top of 5 here, and that makes it a full wave. But what I decided looking at this, because I still have this odd wave out, and this 4th wave has gone deeper than I thought and longer. And in fact, if you look at the length of this and you look at my second wave here, they're just about the same length. So this tells me that those 2 waves match. So it says that there's something wrong with my count here. And so what I determined this morning, actually, and I put up another chart, is that this wave is not actually a separate wave. This is a second wave. That's the 4th wave right there. So that's 2 waves right there. And this wave matches that wave. So let's go look at another configuration of this same chart. So what I've done is I've taken out that little configuration there, and I'm saying, okay, here's my first wave, 3 waves down from my second wave. That is a second wave, another little sub wave, second, that's a 4th, and I have 2 other waves here. So that gives me 4 waves within this, which tells me that that is a full third wave, and I only have 1 4th wave, which came down exactly 38% from the bottom to the top here, okay? And so if I look at that and say, well, then if that came down 38%, the guideline is that my 5th wave up will be 1.618 times the length of this first wave. So if I then plot that at the bottom of this 4th wave, that tells me that I'm probably looking at 2416. Somewhere in that area for the top of this wave. And I'm talking about now the top of this 3rd wave. This is the daily chart I'm back to. So we're just talking about this little subwave here is going to give us the top to that entire wave, I think is about 2416. And I put Andrew's pitchfork here, and that sort of gives me a kind of a crossover point in here. So that kind of works, and that's what I'm thinking is going to happen. It cleans up this wave an awful lot and also matches with the NASDAQ. I'm going to show you the NQ, which is the NASDAQ futures. And that one, I've got a wave up, and I've had to renumber this. This is a 3rd, and this is now my 5th wave, which was this was the Trump speech. So we were down here the evening of, and then of course it took off that night and gave us what ended up being a larger wave. I thought we were just going to do a double top here, but it ended up, because we had an ABC down, which I flagged that night. I said, okay, this is not a motive wave down. It's not a first wave down, because it didn't come quite down to the previous fourth, which it should. When you get a first wave, it should always come down to the previous fourth wave, and it did not. So that told me that we were heading up at least to a new high, and it ended up that we got a 1, 2, 3, 4, 5, which matches ES now. And you can see that my two waves in here, in my third wave, that's the second and that's the fourth, they're much easier to see that configuration. And so that's another reason that I look at a lot of different indices and markets, because they're all going to be doing basically the same thing. So to look at just one doesn't make a lot of sense to me. You really need to have an idea of what the big picture is doing and look around and see what the other indices are doing. And if there are waves that are not clear, that will help clean them up. And so that's what I did. And I went, okay, there's my configuration. So when I go back and look at this wave, although this little fourth wave doesn't look very good, it's the same configuration. So that sort of tells me that I'm on the right track. So I'm looking at a high here. I don't think this is going to take more than 2 to 3 days to get up there. So maybe, you know, we're talking about Thursday today. Maybe we're going to get a high. And I haven't looked at Andy's cycle dates, but maybe we're going to get a high on Monday, sort of thing, because weekends we tend to get a positive reading in terms of movement. Okay, so that's a prolonged look at ES and NQ, and let me just go over. And if you have questions as we go, just put them in your chat box, and I will try and get to them as we go. This is the S&P 500. And this is a 2-hour chart, and this just shows you all of the third wave. Now, I have got this configured as a corrective wave. If you wanted to say, well, this is a wave 1, this is a wave 2, this is wave 3, this is 4, 5, it doesn't really make any difference. But my problem with this is right off the get-go, this looked corrective, because there is no second wave on this, as far as I can see. And so to me, this is a corrective wave, and we've had a triple three, and that is a combination wave, a set of 3 different waves. This was a running triangle, and out of a running triangle, we had this final shooting wave that went up in 5 waves, which you would expect. The running triangle is very difficult to see, but you will always get a triangle. Now, let me put that another way. If you get a triangle, it will generally be in the 4th wave, unless it's part of a combination, which this is both, but this would be sort of in your 4th wave position. It's always in a combination. You get a triangle as the last pattern in that combination. So if you have a triple three, there's 3 waves. This was a zigzag, and this is a triangle, and this wave is part of that triangle. It's the wave that comes out of the triangle. It should go in 5 waves, and we're up right at the 5. Now, it's interesting to see that if I measured the first wave over here to the bottom, I'm not showing you that right now. If I go and show you that, it's going to move everything around on me. I'm here, but here, this is my first wave here. Okay, second wave, top of the third. Unfortunately, this program, when I move the resolution, it changes around the relationship to a lot of the letters and numbers. So if I was to measure that entire distance from the bottom of the first up to the, or sorry, if I was to take a measurement of the first and I was to measure my third wave here, this is actually ending up to be 1.618 times wave 1, this third wave, which is a natural length. If I was to go back, one of the concerns I had earlier was that going back to ES, this wave, third wave in ES now, is longer than 1.618 times this first wave. So there's just some interesting things that are a little out of whack on some of these waves, and it's making it a little difficult to use Fibonacci lengths to be able to determine what the top end is. So I just kind of throw that out there, and so that's been one of the difficult things, although it seems that they are getting close. And it also tells me that my count is probably correct. If my third wave, which should be 1.618 times the first wave, is actually coming out to that, then my numbering scheme, my count must be well, not must be correct, but there's a good probability that I'm on the right track here. So what I'm looking at here is just a final little wave up, and we'll go take a look. Let's just go into a little 10-minute chart here. So here is our fourth wave, and you can see that at 2406, it may go a little higher than that. This is not measured in any way, but that we've got just this little length up to do. It may go to, as I said, in ES 2415. I haven't measured it in the SPX to determine that that's it, but it just has a little bit more to go, and that is the end of the third wave, and then we should head down in a larger fourth wave to the 38% mark. And in the S&P 500, let me just see if I can give you an idea as to where that might be. This is a little too wide here, so let's say we get up to 2415. That number is going to be at 38%, down to around 2254. Best I can make it. Okay, that's not going to be exact, but that should be our fourth wave drop, is what I would think we would be seeing there. Okay, that is the S&P 500. I'm going to look at some other indices, but I'll tell you what I did. This is a good place to, I think, put that in. I just got to find it here. It's number 7 on a weekly. So if I go on a weekly chart, and this is the S&P 500 from the bottom, 2009, right here. I'm going to stretch that out as much as I can, get rid of these things. And this is my numbering scheme from the very bottom. If you know anything about Elliott wave, I'll just try and, because if you don't, this is going to be maybe lost on you a bit. But you would generally have sort of 5 waves up, and you can sort of see that we've got one wave up here, we've got a second, we've got a third, and we've got a fourth, and we're now in our fifth. And this does not look complete to me. It needs another down and it needs another up. But when I look at these, there are some rules in Elliott wave that will tell you whether this is a motive wave, it's a trend wave, or it is a corrective wave. And so what we have here in the very beginning of this is we had 5 waves up, and then it was followed by another 5 waves up. And so that I classified as a zigzag, an A wave. Now, the problem with somebody saying to me, well, this is a motive wave, is that this then would have to be a first wave. This would have to be a second wave, but your second wave should come down to 62%. This didn't even, if I measure it, didn't even make 38%. And that's one of the sort of guidelines. It has to at least do that. In fact, I don't agree with that rule. I would say it virtually always has to be 62%. So that tells me that this is not a second wave. It also could be, we could get a 1-2-1-2, but that means we would have at the tail end here, we would have a couple of big fourths and fifths, and we don't have that. So this tells me that we have a zigzag here as an A wave, and then we have a 5 waver as my B wave. And that seems to look good to me. The other thing is that this is an ABC here. So this is a 3 waver. So there's a lot of things in this that tells me that this is a corrective wave. Now, that in the big picture doesn't mean that much. It does to me, but when I look at some of the subwaves in here, I mean, there's a reason. Some people are measuring this as, or numbering this as a 1, 2, 3, 4, 5, and think we're in the 5th wave. Well, for a couple of reasons, that can't be. And if I look at the other indices, it tells me that we still have, and based on, and they're all slightly different, but they all have sort of an A, B, C look to them. And some of them are quite profound that way. If I was to go look at the, I haven't pre-looked at this, so I may be blowing this. Yeah, so here is that same wave up, and we had the 3rd wave here, but we've had a 4th wave down, and then this wave did not come down to a new low, so this would have to be classified as an A, B, C by the looks of it. And so that sort of matches the S&P 500. So we're getting into some kind of nitty-gritty stuff here with the S&P 500 and some of these major indices. But I wanted to point out, because I do get asked from time to time, people say, well, this is a, somebody said to me the other day, a primary 5, like a motive wave up. And I'm saying, well, no, I have this as actually a corrective wave, because that's the way it looks to me. And looking at the subwaves, That seems to be apparent in a number of different places. And the other thing that you would say on this, if this was a first wave, this is a second wave, that was a third wave, well, that wave is way too short because the third wave has to be the longest wave. This is the longest wave, very obviously. So anyway, that is my bigger picture look at where we are in terms of topping. And I see us having a 5-wave stretch here, needing a 4 and a 5 up to a final top. So we're very close. And I just wanted to go through that big picture. There, I feel better now. having told you where I think I am. So if you have any questions about that, you can let me know. Okay, I'm going to move on then to just a quickie look at the Dow. We'll just get a little, I looked at these earlier today and I have some of these numbered. I don't know if I did the Dow actually. So that may be a bit of a misnomer. Yeah, I didn't really look at the Dow, I guess, today. So the Dow has got the same. This is a daily chart on the Dow. Let's see if I have anything here that makes any sense. So yeah, this is the one I actually did look at this. So here's a look at the Dow. This is a big picture. This is a daily chart. And this shows you sort of an A, B down at the bottom here, B and a C wave. And one of the keys here, somebody would say, well, how do you know that this is not motive wave? Well, this is very obviously an ABC. This wave, first wave up, is in 3 waves. So that tells me it has to be a zigzag. So you can't just start a motive wave in here. So this tells me that this wave is corrective, and that means all the indices have to be corrective. You're not going to have just one be corrective and the other is motive. So that goes to that question of what do we have here. So that's where I get this ABC thing happening here, and this gives me starting with a 1, 2. To me, this is obviously a 3. I'm looking at a 4 down here at about 38%, which takes me down on the Dow to about 19,500. So a big drop of about, what are we at now? 21,000. So that would be a big drop of 1,500. So, and then we have one more wave up, which would be a 5th wave. And if I were to take my little Fibonacci tool and measure my first wave and say, where might that take us? And if we came down 38% and then headed up 1.618 times the length of that first wave here, that would take us up for a final top of 22,164. So let's just kind of say 22,000 because it might not make it all the way up there. So that would be, this is just some kind of blue sky in it. It's kind of a what if. But that kind of gives you an idea of where I'm thinking and what we might be looking at, okay, for the rest of this wave. Thanks, Vern. I hope this helps. And by all means, you can always send me a comment and poke holes in it. But I've been looking at this for a year, and my take on this just has not changed in all of that time because I see everything moving together that way. So that's the Dow. Now, if we go over to the NASDAQ, I'm just going to do NDX because I know I did look at that one today. And it has got, it's got the same configuration, top of the 3rd wave here. But this one, again, has got this great big A, and it's got this 3-waver up, which says to me, corrective, whole thing corrective, A, B, C. And you can see my 1, 2, and I'm counting this as a 3rd wave. So this, if it is a 3rd wave, it should have 5 waves within it. And so you see I've kind of got sketched in here a 1, 2, 3, 4, 5. So this puts me at a 3rd wave up here, a 4th still to come, which typically goes into the area of the previous 4th, but down at 38%. This is taking us down to 48.22, around about. And if I was to measure the first wave here and go up, this one might take us all the way up to 59, almost 6,000, as it could. Now I'm saying it doesn't have to. This wave may shorten up because once you get into these, we call them blow-offs, but they don't, they typically, I won't say they typically, but very often they cannot go the full length in the 5th wave. So it may be a shorter, it has to go to a new high. And we will be, believe me, counting waves as it goes. So that'll be a good indication of where we are in this 5-waver, because you'll have 5 waves up in terms of subwaves. So that'll be a good indication of where we are. But that is what I'm seeing in the NASDAQ. Same configuration. We're on track, and we're looking at a top here coming up. New York Stock Exchange, I always like to look at this as just a kind of a big picture, because this is the largest cap. Maybe I should have left out a thing. Yeah, I looked at, I guess I was looking at the daily earlier today. I've got so many different charts in here, so it's tough to keep everything kind of straight as to where we are. So this is the NYSE for me. And again, this is a little tough. I got a lot of numbers in here, but if you look at these circle numbers, white, 1, 2, 3, 4, 5, that's my A wave. Okay, there's a blue A, B, and a C up in here for my 5th wave. And so I'm looking at then, because we had 5 here in white and I had 5 subwaves, I am looking at 5 for my zag of the zigzag. So that's the way I'm configuring it and looking at it. And if I was to say, where is this coming down to? 38% puts it at 11,000. We're up at 11,500, 11,600 right now. So I would say 4th wave down here. 4th waves come down in 3 waves, and 5th wave should go up in 5 waves. Okay, so that is the look at the big picture in the NASDAQ, or sorry, in the New York Stock Exchange, which is the big mom. Okay, I'm going to move momentum in the 5th of 3rd appears greater. Well, it's a small, yeah, it's kind of a blow off. If Vern says momentum in the 5th of the 3rd appears greater than in wave 3, wave 5 still is wave 3. So you do tend to get at the end of a wave a blow off like that. So that doesn't surprise me at all to see that. But once we get into the 5th wave, volume will start to go down, and we shouldn't. And in fact, I'm looking at the 5th wave as possibly being an ending diagonal. We'll see. We'll have to see what happens. But if we're going to get an ending diagonal, it'll be in the 5th wave, whether it's a C wave, a larger C wave here that we have, or it was a motive wave. You can have ending diagonals in the 5th wave. So we'll see what happens here. But I think it should be relatively obvious fairly soon in, because if we're going to get an ending diagonal, which should be 5 waves up, but there'll be overlapping waves, and all of the waves have to be in 3s, so that if we end up at the bottom of the 4th here and we go up in 3 waves and then we start a 2nd wave down, it's probably going to be an ending diagonal, and we'll play it as such, or at least I'll analyze it as such until it tells me anything different. So thanks for that comment. Oh, for NDX. Yeah, well, I'm not going to go back to that. Yeah, good point. So the dollar, let's go look at what the dollar's been doing. And this hasn't been much of a surprise here to me anyway. This is my dollar chart. It hasn't changed that much in the last little while. I can spin this out a little. It's a 4-day chart here, so you can see that we had this. This is actually a corrective wave, but I've got a 1, 2, these circle yellows, 1, 2, 3 circle yellow, 4, and this is a 5. But the problem with this wave here, and this is a 4-day, I think I mentioned that, is that it went up in 3 waves. So that tells me it's going to correct in the other direction. And I had flagged that earlier on, and that was partly or a lot because of what the euro is doing. The euro came down in 3 waves from the triangle that it was in, and we will get into that shortly. But this is going to mirror, it's going to be the opposite of the euro. So this went up in 3 waves. You can see that in A, B, C, and if you measure my C wave, it is 1.618 times the length of the A wave. And so that actually told me that we were going to end right about here. And sure enough, we did. And then I said, we're going to come back in a 1, 2. It's either going to be an A, B, C, or it's going to be 5 waves. And I would say typically it will be 5 waves, because an ending wave is usually in 5 waves. So we've got our first wave, we've got our second wave. I'm looking now at a very large 3rd wave and a 4th and a 5th. Don't know if that's what we'll get, but this tells me that our second wave is pretty well done here. That's my 62% retrace line that I've got at 102.09. And so I'm expecting a turn pretty well momentarily. I don't know if that's today, mind you, but in the next short little while. And that's one of the reasons for our inflection, I think, today. So there's the dollar. I'm looking at this at coming back down here, and that then takes me into the euro. So if I look at the euro, and I have one of these, here we go. Now this area down here is very messy, and I kind of apologize for that, but I haven't gone in to sort of clean it up. I just wanted to show you the bigger picture on the euro. So this is a daily chart, and if we go back to a 4-day chart, you can see we had a very long wave down here, and then we had this triangle. Okay, A, B, C, D, E. I know it's not very easy to see. I want to get back to the daily chart. So here is my triangle here. And when we had our Trump election, we had let's call it a truncation. And this is actually written up in Elliott wave, that when you get into a cycle degree wave, very high-end degree waves, when you have a triangle, the E wave can sometimes fail when you have a large event. And so that is exactly what we have. This thing came down, but it came down in 3 waves. So it's got a very clear A, B, C. I know you can't see it with all this. We're going to jump in a little bit tighter to show you what I've got here. But the big idea is that this wave came down in 3, so 3 waves has to retrace. So because if you were to flip this around looking at my dollar chart, which we were just in, and in fact I could get to very quickly here. Can I? Yes, I can. So there is my daily chart, which is the opposite of what you're, it's flipped upside down to what you're looking at in the euro. And so here we are. So there's in the dollar chart, this would be my first wave and my second wave. So it's a mirror image. And so I'm seeing this heading up. 1.13 is my target. And then that should turn around and come down in a great big 5th wave. And so that to me is what we're looking at in the euro bigger picture. Okay, that said, let's get into a 2-hour chart, which is what I have been showing everybody for the last little while in terms of where we are. And maybe this has got a lot of numbers in it, and I know these are going to move around when I move out here, but here is my bottom of that wave. I showed you the great big A, B, C down. We came up in a wave here that was very corrective, all overlapping. And that told me that we were going to come down either to a bottom here. There actually looked like there was one wave up here, the first one that might be motive, or we were going to come down to a double second wave. Okay, so right now there's a couple of places we could go, but I had called this at the top here and said, hey, we're coming down. We have an A, B, C happening here, and we are still headed down. And I have got either, if I was to measure my A wave here and look at my C wave in this configuration, we do have a 5-waver here. We have a 5-waver down here, and it looks like, so we're talking about 5 waves down, then a zigzag it looks like we're going to get. If I take my A wave and measure the length of the C wave now, equal lengths comes down to this sort of double 2 configuration. So it could be just a very large second wave. If it's going to go down further, and it would take us to a new low, 1.618. So you've got, so typically your A wave is the same length as the C wave in these zigzag configurations. The C wave could also be 1.618 times the A wave, and those are your 2 most typical lengths of waves. So it will be one of those 2. And then we should turn around and head up in our big C wave to that 1.13 target area. Okay, so that's what we're looking at here as far as I see in the euro. And that sort of sets up a lot of the other currency pairs. So I'm going to take you through what I see in them. The Australian dollar. Here is the hold on just a sec. I'm going to just get you a better chart here, if I can find it. So here is my chart of the bigger picture, Australian dollar. So I have had for some time, I'm just going to pull out wider so you can see what we've got here. Um, this is the 3-day chart. So we had a great big long wave. You can think of the euro here, a great big long wave down. And then we've got not what is a triangle, but it's certainly a fourth wave. And so this would be a third wave. And so when you get to the bottom of a third wave, you have a fourth wave, which retraces 38% typically. There is my 38% line at 0.83. So this is the big picture. We had an A, B. We actually had a sort of, oh yeah, we didn't have quite a double B. It missed by a few bucks down at the bottom here. And so we had, or a few cents, I guess. We had an A, B, and I've got us doing 5 waves up to this top, or we're going to do an A, B, C up right now. So what I have us doing is we did our first wave up here, and we've got this counter trend move down. So this is the big picture. I'm just going to go back into my daily chart and show you this so it looks a little bit more reasonable here. There's my first wave. Well, that was my first wave here. This is my first wave here. So this was, let me go back a little bit further here, 2-day chart. So there you can see my A, B, and then we've had this, 1, 2, and so we're coming down in this corrective move, and this is going to be a second wave. So we've been waiting for this thing to turn down for the longest time. So here's my first wave. I'm looking at a 62% retrace. We came down in an A wave, and that's just really finally loosened up overnight and came down. I'm looking at now a B wave and a C wave down to this 0.738 area. And then we should turn and head up in our final C wave up to that 38% level that I showed you, which is right here at 0.83. So there's my big picture on this one, okay, on the Australian US dollar. It has been a real pain because it held up here for the longest time before it actually came down. It has been a very difficult set of waves to read. I'm going to go into my hourly chart just to show you what it would have been like to be me pulling my hair out. Let's go into an hourly. So this is my hourly chart of the top of this monster that just would not give up. This is that one that I was showing you. This is the wave down, which now I'm going to go in a little tighter here to a 30-minute so that you can see, I mean, this thing has been up and down. I actually have a missing wave in here as well. So the service missed a wave, which didn't make it any easier. But we have got what looks like pretty well 5 waves down. I think we're going to get one more fourth wave up and a 5th wave down before this one is over for our A wave, okay? And the reason I say that, it's been tough getting an actual measurement on this, but if I was to measure this wave, typically when you get these first waves, and anybody in my Traders Gold area, this is a typical looking, not a typical looking, this is a configuration of the fourth wave, or the first wave down that I showed you on my page, sort of a typical first wave where the first 3 waves are the same length as the 5th wave. So what I have here is it's very difficult to see, but it's the 1, 2, 3, 4, and a 5 still to complete. I don't think we're done yet. And you can either have this last wave down as the same length as the first 3, or it can be 1.618 times the first 3. So this gets into these Fibonacci relationships. It's already gone past the 1.618 level. So I'm going to suggest to you that it's probably going down to a full length here, this C wave, we'll call it, or this 5th wave at 1.618 times the first 3. I did that quickly, I know, but the point is this wave does not look complete to me, and it looks like it's got a little bit more down now that I look at it, and I think that our target might be 0.753, and then we're going to get a big bounce in a B wave, and then we should get a C wave down to our target, which I mentioned down here is 0.738. 0.737 before we get another wave up, which is our C wave to that 38% retrace level, which I had mentioned. Okay, so I hope that all makes sense. I've gone from a larger perspective down into, this is a 30-minute chart just to show you what's happening right now. Okay, so that is the Australian dollar. let's go look at, so we have an inflection point setting up here. And so I'm seeing this in a lot of other places, which leads me into the pound US dollar. I want to go to a 2-hour chart here and find my chart. Now, I had said that I thought I was going to change. I'm have a little bit of a conundrum here. Let's go measure this. I didn't get a chance to do this. So, okay, this tells me we're coming down further. Okay. I said I thought I was going to change my configuration or my count on this. I don't think I'm going to. Let's go to a 4-hour chart. I'm going to get rid of this. So we had 5 waves up here. And I had a little bit of a challenge with this 4th wave here, in that it looks like it's gone into the area of the 1st wave. And that's one of the rules in Elliott wave. If you're going to have 5 waves up, if the 4th wave goes into the area of the 1st wave, that is not a 5-waver. That then becomes a 3-waver. It becomes an overlapping set of waves, which means it's going to collapse. And we got up into this region here a couple of days ago, and I said, I do not like the look of this. And I also didn't like the fact it just wasn't moving. I said, we're probably coming back down, and I think we're going to come back down to a double bottom. I looked at this morning. I said, well, you know, it's a second, it looks like a second wave because it stopped at 62% here. But, you know, if I do my measurements, and this is where I rely on Fibonacci measurements so much, and if you take your A wave, this is my A wave, you will 99% of the time find a relationship between that A wave and your C wave. So if I was to look at this C wave, this tells me that the C wave is either coming down to this point here, which would be, and it could stop right here where we are, because I do sort of see 5 waves here, or it's going to come down to a new low here. And one of the problems I had with this low, which I mentioned right off the bat, and this is the thing we've been seeing with the Australian dollar, is it did not hit the previous low. It missed it by, I don't know, 20 cents or 10 cents or something like that. And typically what it will do is it will come right back down again to find it. So I have a bunch of reasons here that I didn't like this wave and thought it was coming back down. I still think my preference is for it to come right down to the bottom again. Secondly, it could just come down to this 62% level here and turn around and go up. Longer term, on the pound US dollar, we are looking at, I don't even know if I've got this set up anymore. Yeah, I do, sort of. I've got a lot of stuff happening down here, but this is an ABC wave. And so this should come back to the 62% level at some point. It will either do that or it'll come back to the 38% level. So there's 2 options for this, because it is a first wave. It is a first wave down, but my preference would be it's going up to 1.52 rather. I don't know how it's going to get there. But that's where it's got to get up to. Or it could possibly just do the 38% retreat here, retrace. But first of all, I think it's going down to another double bottom, and to do that properly. So this is this is a little bit difficult chart to reconcile, and but I think it's either going to turn here or it's going to come right back down to the bottom. So that's the pound US dollar. US dollar CAD, this is the one that I am looking at as the big opportunity. So here we are. This is a 2-hour chart right now. We'll go to the 4-hour. Again, very messy. Let me just try and take you through this. We did 5 waves up to a big 5 right there. And then we did a very kind of motive-looking wave down here. And then we had this configuration, which looks like a double second wave to me. And so I have been waiting for this to retrace. This is all extremely corrective in both directions. And it has now come back up to my target, which has always been 1.34. So I am looking at this to turn down from this area here. And if we go to the bigger picture on this, go out to a daily chart. this is why this is such an opportunity, is that in the, let's go out even further. So I'll show you the big picture. So again, you can look at this. The US dollar CAD, of course, is an upside down chart to the other currencies. It starts with the US dollar, whereas, you know, you'd have a pound US dollar. This is US dollar CAD. So it's a flipped upside down chart with the dollar going in the other direction. So we had a very long third wave up here. This fourth wave is an A, B, C fourth wave, and they always come back to, as I mentioned a couple of times earlier, to the previous fourth wave, or 38%. I haven't measured the 38%, but here is the previous fourth wave. So that's where we should be heading. That number is about 1.19. So that is a big drop we have here. So I've got us coming down in a first wave, in a second wave, and this is the C wave that we're setting up for now. You can see that we sort of had this double two here, which then takes us into my 2-hour chart, or my, let's say, the 4-hour chart, which I was just showing you. And there is the 2 there. So I'm expecting from here 1.34 all the way down to 1.19 before this wave is over, and it will probably go down in 5 waves. So I think that's a big opportunity. That's something that you can get ready for. Where are we now? Whoa, look at there. There's my target. And that was a measured target, and it is right there. It hit it. And so this is a 10-minute chart. Here's a 2-minute chart. So you can see that we just look like we're starting down. This is a live chart. And in actual fact, this looked like an ending diagonal when I had looked at it a little bit earlier today. So there and there, not right there. So this would be, just so you get used to seeing these. So here's my ending diagonal. 1, 2, 3, sorry, and 4. And then it goes up to a final fifth, and those would. So that will, so it goes up to a fifth, and it goes above, we call that a throw over. It goes just above the trend line here. Now, I'm going to just jump out, because you might say to me, well, what's your line there from? So what I had actually done, my horizontal line, is I had measured, if you can sort of see this, this is my larger blue A wave right here. So we came down in a 3, then we have another A, B, yellow, A, B, C, that's my A wave. Then I have a B wave and a C wave. If I take my A wave and I measured that right from the bottom to the top here, and I look at the bottom of my C wave, it is giving me a target right there of 1.618 times the A wave, which is a typical configuration. So what I have here is a number of different things telling me that that is my target at the top, and that is fairly consistently in the market. You're going to find that you can do measurements and well, measurements from different points. And if you get two, a couple of them that are pointing to the same spot, you have a much more likelihood of that being your target for either an end or a beginning of a wave. So I'm looking at this both as an end and a beginning of the wave. Okay, so I'm expecting a turn here and heading down. So I'm seeing a lot of changes in the marketplace. The Australian dollar, for example, possibly the pound, either that's 62%. Let's go on to, okay, so that's all I want to say about that, because I wanted to move over to the US dollar yen. And here is, because that looks like an inflection point happening right here. So I wanted to sort of mention that, this would be an A wave. But let's go out to a bigger picture of this one. The daily chart on this, somewhere I have a numbered configuration here so that you can see number 4, number 3. Peter, where did you put it? Here it is, right at the top. So here is the daily chart, and this came down, 2-day chart, in an A, B, C wave. We had 5 waves up to the top here. This is 120, 126 about, and then we had an A, B, C. And by the way, if you were to measure this A wave, this C wave ended up being 2.618 times the length of the A wave. So then again, it's Fibonacci is all through the market if you're not used to that. And then we had this A, B, C up, and I said, look out, this thing is going to come back down. And sure enough, we had one wave down, which is very corrective. And right now I'm looking for this wave to head up and just knock off this fifth wave, because we have 1, 2, 3, 4, 4, and a 5. Okay, so I'm looking, I can get rid of these things. They don't need to be there. This messes stuff up. So I'm looking at this as going up. And then once we get to 118.6, then we should head down and hit this point down here, 98, around that area. And then we should turn there and head back up in a big fifth wave. So that is the configuration. So it's a little bit of not day trading, but this is not a long wave up here. We're going to go up, we're going to go down, and then we're going to go back up again. And so that's what I see in the configuration here and my projections for the US dollar yen. So let's go into the 2-hour chart. Sorry. 2-hour chart here, my number chart. So this is the very corrective wave down. And then we had a wave up here, which again, A, B, C. It ended up going up in 3 waves. So it came right back down to the beginning again. And now this is in 3 waves. So this says, oh, it's got to retrace as well. Typically, these will retrace to a previous wave. So this is what I would say we'll call this a 4th wave, for want of something better. But it always will retrace to that point, or typically. And so then I'm expecting this to be the A wave. A B wave down to 62% would be next, and then a C wave up to a new high. And so that's what I'm looking at here. So that fits in with the larger picture. This is my 118.6 that I showed you a little bit on the wider shot of this. So there's the game plan for this one. So I don't know if we're going to make it to this A level exactly, but we should start back down here sometime in the next little while to a 62% retrace, and then that will head up. And when I say 62%, this is all corrective, so it may not hit it exactly. It'll be a B wave, but you'll get pretty close, I would think. Okay, everybody's being pretty quiet out there. I'm moving pretty quickly, so I know that you have the video to replay this. So I try and just get as much as I can done, and I'm falling a little bit behind here. TLT, this is bonds, 20-year bonds. My daily chart on this one showed an ending diagonal. I'll go out a little bit wider here, 3-day chart. So here's my ending diagonal that we had. This goes way back to 2012, right back here. So this is a very big move. And then we had a top, and we have come down in 5 waves here past our ending diagonal bottom. So that tells me that it is done. Once you get below the trend line and an ending diagonal, it is finished. I went to, okay, so here's my daily chart. And so this is looking at the waves down. We had a 1, 2, 3, and we're working on a 4. So there are people saying this thing is going to come down. Well, this to me is not enough of a retrace. And this looks like this is a wave in 5 here from the bottom. So the wave in 5 tells me that's the first of a zig, and I got another zag to come. So again, zigzag is a 5, 3, 5. And here is my 38% retrace level. If I was to take this Fibonacci tool and whip it down here to the 3rd. So my 38% retrace level is right here at 127. So I would expect us to go at least to that point. But we also have a large gap here. So I've been saying that I wouldn't be surprised to see us go to 129.44 in this 4th wave and then head down. So that is my target for TLT right now, up to this one, either between 127. Well, if it goes beyond 127, it's probably going to 129. And I think that's where it'll probably end up. And then it will head down in a large 5th wave. So that will be scary for bonds. But nothing's going anywhere happy, believe me. So anyway, that's my longer term picture for bonds. So let's go look at oil. Oh, oil. I wish oil would get its act together. Here is, this is Texas West, TWI. I had to think about the letters there. Look at a 4-day chart here just to get us acclimatized to where we are. So we had a big wave down, 1, 2, great big 3rd wave. We're in a 4th wave triangle. If I can get my little 4 up there. is where I put us, and it's an A, B, C, and we're at the top of C. I'm going to zoom in on this, but I just wanted to give you an idea. So there's our triangle, and a triangle, of course, is a continuation pattern. So it will enter from the top and it will go out the bottom. So we are going down in oil to a new low eventually under $25, just so you know where that's going. So if I'm going to my daily chart, here is my triangle, and we're showing at the top of the C wave. Now, all triangle waves are in 3 waves. So here's your A, B, C to the top here. This is an A, B, C down. I'm expecting an A, B, C down to about $33 eventually once we get going. But this wave has been going sideways for the longest time. What is the longest time now? Pretty well from the beginning of the year. So that's a couple of months of sideways. And I have been looking for a top on this, a double top, and then I would see it coming down. I do have some subwaves here. If I can find it. Oil, oil, oil. WTI. So here is my sub. Now, what I'm showing you is just this area at the top here, okay? It's just this sideways motion. So what we had was a top way up here, and then we came down in what looked like an A, B, C, and then we've gone sideways ever since. This to me looks like a 5-waver up. So this looks like a zigzag happening here, and I'm expecting another little zigzag, another little zag up here. So this looks to me like it's going to be sort of an A, B, C, and we'll get a new high. It has to, if this was motive and came down, it's just, this is a 3-waver. So that suggests to me that eventually this whole mess is going to go right back up to the top here, and then we're going to, which corrects everything and starts us out anew, and then we will head down in 5 waves. But, you know, we're still waiting for that, and so that's the picture there, and I don't see anything that's actionable on this wave right now, or this this asset, until we see a new top. And even at that, I would want to see 5 waves down to at least this low here. 5 waves from the top, I'd want to see 5 waves down, 3 waves up to about 62%, and then that would be my entry. That's a typical Elliott wave entry. 5 waves down, 3 waves up, or the reverse, 5 waves up, 3 waves down, depending on which way the market is going. So that is oil. Nothing to do there. Now gold is starting to get interesting. Here is my take on gold. This has been nothing there, nothing new here for anybody that's been with me for a while. We had 5 waves up, we've had 3 waves down, and we've got this very interesting, what looks like kind of a 4th wave. I've renumbered this to be a 1, 2, 3, 4, although they're overlapping, because you'd really kind of call this another B wave. And I think we're going to get a wave down to a bottom here, or at least a double bottom. I've also drawn in at 1176 what the 62% retrace level would be. But this wave up to me looks, and I've been saying this forever, it looks corrective. It looked corrective right off the bottom. This looks like an A, B, C to me. And I've looked at the subwaves, and it still looks like that to me. We had a fairly good size wave down. Now, this chart I'm going to show you of subwaves is from a couple of hours ago. And so I have not looked to see what it is doing, although I can do that on my little iPad here as I'm explaining this. So here are this is the subwaves of this B wave. So we're looking at A, B, and this C wave up. So that's what you're seeing here. So there's my A, B, and my C wave. I'm seeing 5 waves down. No, it hasn't really changed. Okay, hasn't changed from this chart really. So I'm seeing 5 waves down. The concern I have is, to me, it looks like this 4th wave is overlapping this 1st wave, and really tight, but that is just a little bit of a warning sign. But if this was going to be 5 waves down, I'd want to see it come down to either this spiked point here or the spiked point here, one of these points, and then head up 62% in 3 waves. And that would be my entry. I know we're going to get a second wave up here. So you can always be assured that when you see something like this, don't go chasing it. You want to find that second wave up, because I would say we're going to get one. If this is actually 5 waves down, you're going to get a second wave up to about 62%, and that would be your entry for a short. So, or we'll go right back up to a double top here. So either one right now, I just don't have enough information to say this is actionable, but we're getting close. And in fact, silver came down pretty hard. And I'm going to show you a subwave chart. We'll just go to silver now, and I will show you what I've got for silver, because there's an opportunity setting up there as well. So here's my silver chart, which is not really, I haven't spent a lot of time. I don't really follow silver that much. I've got this. This would probably be 5 waves up. It's measured, or sorry, labeled as if it's an A, B, C, but it came right back down to this previous B wave. And there's a problem with this little spike here. It doesn't actually exist. They still haven't cleaned up this chart. So that was plaguing me for a while. So this has really come down here in sort of 3 waves. And then we have what looks like an ABC. Very clearly, you have an ABC up. So this wave, to me, looks corrective. And the same sort of thing is happening with silver. I'm looking for probably a double bottom, but it could come down to the 62% level, which is around 1617. If I remember correctly. Yep, it is coming down, which so typically happens, coming down to that little A wave, that little B wave there. So 1675. So a couple of possibilities: a new low here about 1568, or 1675 before it takes off and goes in the opposite direction. So if I was to look at silver, here is my chart on silver. This is what happened on silver. I'm just trying to access the latest chart here. Okay, it doesn't look any, well, it does look a little different. We're down to about this level here. And I can't read my, can I read my numbers? We're down to about 1775. So we're down actually to about here. Okay, but it's come straight down. So to me, and I should have probably got a 1-hour chart. This is a 4-hour chart. To me, this is still a 3. So this could very much be a 4th wave. It has come down in an A, B, C, a great big long wave. To be a 5th, to be anything I'd want to get interested in, it would have to come down to this point. We need a 4th wave and a 5th wave, fairly good sized 5th wave, which probably is going to take it down to about this point here, which would be a good point to do it. But otherwise, I would suggest to you that this looks like it may retrace right back up to the top. So it could just be a 4th wave of this final wave up. Don't know yet, not enough information. I would want to see 5 waves down that I can count, and I would want to see the 4th wave at about the same good, strong size as the 2nd wave here. And then I would want to see 62% retrace in 3 waves up to a point that I would consider a short, okay, because otherwise this could go up to a double top. So we're setting up here, and it is just a little more patience. Sorry, but that's the way the market works, as we all know. So you just want to be patient to try and catch that at the right time. All right, I'm going to go across the ocean here to the DAX. And here is the DAX. This is a better chart. Let me just go to a 2-day. That was my daily. This is just a little simple, a little simpler. Oh, but not correct. Okay, so we're going to have to go with this labeling. Okay, so this is very large weekly chart. 1, 2, 3, 4, 5. So we're working on our 5th wave, and it will probably go to a new high. That's the weekly chart. So I get into the daily chart. This is what it's showing me: an A, B, C down. 1, 2, 3 looks like. And a 4th, and this looks like we will get 2 sets of waves here. It looks like I'm looking for a 4th wave of the 3rd, and then we may get another 4th to a final high. Anyway, this is the 62% retrace level. Oh, geez, that doesn't look right. No, that's not it. This is it here. So we're way up above that. I'm expecting a fourth wave. This looks like we have 1, 2, 3, 4, 5 waves within this little subwave. So this suggests to me we're looking at a fourth coming down almost right away on this one. And if it was going to go to its 38% level, it's going to come down to about 11,000. And then we got another wave to come. Okay, so if that helps in terms of the DAX, but you can see that everything is moving up to a final top, and we've got our currencies sort of doing the same thing, but they've got another wave to go. We've got the US indices, currencies, some of them have got 2 waves to go. We've got a fourth wave and a B wave and a C wave still to go in currencies. And in the US market, we've got a fourth wave and a fifth wave still to go. We have a fourth wave and a fifth wave still to go overseas. So they're all lining up and moving together. So that gives you a picture of like what's the market doing. Here we're very close in AEX, same configuration, A, B, C. This would have been in a weekly chart. I haven't looked at this in a while, but here's you go. Here's your waves up 1, 2, 3, and I've even numbered the subwaves here. And so this is a fourth wave, obviously, and a fifth wave up to a top. I haven't moved these, haven't played with this in a while. But this one is also topping. Now, if I go to the GDOW, here's the GDOW, which is the global Dow. It's already at a new top. So that's kind of interesting. So there's a big third wave, fourth wave, fifth. That's the top of the, I would have to renumber this. This isn't numbered properly. This should be top of the third. I haven't looked at this in quite a long time. I just thought I would plow through it because we've been talking about the bigger picture today. So this would be a 4, that's the wrong 4, and this would be the top of the third, and this is obviously the fifth wave. It is to a new high. We've got a 1, 2, and a fourth wave to go here. So we're still missing a wave, fourth and a fifth. So that lines up with the US market. So if anybody tells you that the US market is done, we got to have 5 waves. So there you go. We're all in the same position, and you can go look at the DAX. You can go look at the AEX, which is the Netherlands Holland exchange, and you can look at the U.S. indices. And so everything is telling me, and the currencies are all telling me the same thing. There's a couple of waves left, and then this whole thing is going to keel over. Okay, that's it for me. It's about time I stopped talking. Any questions? Here's one. What is approximate top of 3? Okay, I'm going to guess that you're talking about AEX because you didn't say, but knowing where you're from, that would approximate top of 3. So if I'm looking at AEX, that is telling me that it's very close. I want to get into the daily here. So what I am doing is I'm taking my A wave right here. I'll do a couple of things. And if I extend that, it tells me we're just going to a double top. So, so my extension of this A wave takes me 1.618, takes me to right up to the top here, a double top. If I was to go, okay, what is 1.618 times that? It could be up to 540. This very easily could come down here in a fourth wave and go right back up because this looks like it's starting to collapse a little bit. It may not go above 509 very much. It's got to get to a new high, even if it's a couple of ticks. So I just can't, I don't really have much to go. This is telling me that it should end up pretty well. There's a dotted line right there. That's what the extension is telling me on that. Okay, so that's best I can do on that. Let's see, approximate top of the Robert, US CAD on lower in time frame. I don't know what that means. Mike, can you give us an idea of the first bounce point for US? First, well, I can let you, maybe this will answer the other question too. US dollar CAD. Let me go find that. I want to get into probably somewhere 1.34. Yeah, I'm still around the same spot. Okay, so this is got a first wave up. That's a cleaner chart. When you get an ending diagonal, which this looks like, it always retraces to the beginning of the ending diagonal, which really is 2 points. It's going to come down to the previous fourth. I would guess, and it's one of these two here, but 1.328, I would be looking for a bounce there. 1.32836 is kind of a previous fourth there and could be considered the beginning of that ending diagonal, okay? And then that would be a first, and then you get a 62% retrace, and then it should head down to the next fourth. So if I go to the hourly chart, then it will probably head down to my B point here, okay? So that would be about right to me. So you'll come down here, 1.328, bounce, and then another one down, okay? And then this thing, of course, is going to keep going. There will be, if I was to go look at the, say if, can I do that? Daily chart. Sorry, I'm just trying to get myself a chart that I can actually, it's a little cleaner that I can see. There is going to be a bounce. So we're looking at this going all the way down to 1.19. So let's just see if we can just do a couple of measurements here, because I got asked the question. If I was to say that is the first wave right there, and a second wave there, so isn't that interesting? So so here we go. So I'm going to take my first wave down the measurement. I'm going to move that then to the top of the second wave. That shows me that 1.618, lo and behold, it comes right down to this point here. So it's interesting. It always amazes me how the market is just so spot on Fibonacci lengths. So I would say that this is where you're probably going to have a very large B wave. So we'll probably, or it'll be a fourth wave. So you get a third wave down here, a fourth wave, and a fifth wave is probably, I think I'm probably looking at 5 waves on this. Just because it's an ending wave. I think that's the way it'll probably sort itself out. So we should have a very good strong wave all the way down to 1.247. Then I would watch for a bounce there, but it may only be a fourth wave, which won't be a huge one. If it's a B wave, it's probably going to go up a lot higher, and then we'll get a C wave. So I'm not quite sure. But, you know, if this aligns itself with the U.S. market, which will go up in 5 waves one way or the other, then we will get probably 5 waves here. So I would consider that we're likely to get 5 waves here. I hope that sort of answers the question about the different points that it can bounce at. There's probably another one here. So when you get bottoms, you typically will get a bounce around that bottom. So it aligns itself with those, but this will be a biggie here. My guess is 1.32. Oh, I see. You're back a ways. Okay. Yeah, probably usually likes round numbers, 1.32. I don't know what that is. Well, I'll leave that to you because I'm kind of taking time away from. Let me just see if there's anything else. Did gold do a double top on February 23rd? It's going to be too hard for me probably to. In here? Oh, February 23rd. Well, obviously. Oh, February 23rd. I can't see that where I am right now, so I'm sorry I can't help you there. I don't think it did. As my memory is that it did not, or I would have flagged that. So I think it may have been close. I can't tell on my subwaves here. Unfortunately, I can't read this stuff, so it's just really difficult to be able to figure out 23rd is somewhere up in. There's no double top in here, so I'm not seeing that. What else have we got? Thanks. Took multiple positions at top, planning on dumping 1 year future. Okay, you have to, when you're sending me little comments, you've got to tell me what asset you're talking about, because typically there's a 20-second delay on this. I have typically moved on. And so if you don't put that in, I don't know what you're talking about. Are you still short US dollar CAD? Still short. I got short this morning. I got short, but at a very small little amount. So I've got like 2 contracts, I think, in that 50,000. So I will add to that as we start coming down. I will add when we get retraces. I want to see us down. As I mentioned at this point, this is the 30-minute chart of US dollar CAD. So I would want to see us get down to the bottom of this. I may add a little bit to it before we get there, but once we see a second wave bounce, that's where I'll be watching to go a little more whole hog on it. Okay, so you always want to be, once we start coming down, if you're going to add on, you want to do it at the tops of 3-wave retraces as much as you can. Oh, Mike, US dollar CAD. Okay, so what was your question? Let me go back. My guess is 132. Oh, okay, so I'm not going to go back on that. A nice guess, and we'll see what happens. Is there? I think you kept looking for a double top before February there. And sorry, I don't, Kurt. I'm not sure. I was looking, I know, various times about, okay, I was looking for a double top on gold, but we haven't had one so far. So it would be nice to get one, because that would tell me a lot, but we haven't had it so far. And we don't necessarily have to have it. Certainly not if it's, well, it doesn't matter. If it's a motive, it won't have, but if it's corrective, not as much either. I think I've got all the questions answered. Unless I'm just kind of flipping through just to see if I've missed anything. On this one, on CAD, if we go to a 1-minuter, this looks like this could be a first wave. Yeah, I can't really tell whether we have got a first set of waves down. It hasn't come down anywhere. It has kind of come down to this 4th here, but we're just going to have to, I want to see a second wave. If this is a second wave, that would be great. And if it stops at 62%, I'm now down on a 1-minute chart. So we're down here fairly far zoomed in. So there's kind of a previous 4th there. I would say it has come down to that point. So that would make sense. If it turns down right here, which is, sorry, I'm hitting the wrong things, is right now I put it at 62%. So again, 1.34959. Yeah, 1-minute chart. So if it turns down here, I would say we're pretty well gung-ho, and you'd want to put a stop at the top here. The time that you can get comfortable is once it gets to a new low here, because that looks like we might have 5 waves down, but I can't tell. There's got something funny happening here. So we still could go to a double top here. So I'm not really 100% sold that we've topped yet, but we're getting close, and we're not going to go much above 1.34. If we go down to a new low, I would say, yeah, we've topped, and we're on our way. Okay, so I think that is it. We're getting a little long in the tooth here. Okay, 122. Yeah, I don't like to go much past that. So thank you very much. I hope this has helped in terms of the market. I can look just behind me here to see what's happening with wow, ES has come down even a little bit further. So that should be the bottom for wave 4, and it should start to hit up now. I'm not seeing anything. It looks like the Australian dollar is heading up a little bit. So I'm not seeing anything I can really add to that. So that's my take on where the market is going. And so it is still a really dangerous market, but I got a feeling, looking at it, that we're finally over this sort of fourth wave conundrum where we had everything just levitating and going back and forth and waiting for us to get a turn. It looks like we have a good hefty turn today in some of the indices. And if we, over the next few days and into maybe Monday, we get a turn and a top in the US market, that would be terrific and would finally get us, I think, on the way. So you can see, I hope today, where some of these assets and the currencies and various things are kind of in their fourth and fifth waves, but they're kind of a little out of sync. I'm hoping that they get back into sync for the final fifth wave, this final move. And I think that would give us a stronger move and it'd be a little bit easier to trade. Hope so, but you know, that's the market. It doesn't like to do that too often, so we'll just have to see what happens. Anyway, best of luck out there in your trading. Keep your, as I have been saying to everybody, don't get aggressive. This is not the market to get aggressive. Once we get to a top, that will be a final top. That will be the market to get aggressive, and that is going to be a money maker. So thank you very much again for being here. Really appreciate you showing up. And for anybody that does not get a video in the next hour, hour and a half to 2 hours, just shoot me a little email and I'll make sure that I get it to you.